Right, this is the day 2 of the bootcamp. All right, and today we'll be talking about what we call break of market structure. Break of market structure, right? In the previous video, we talked about how the market has something that we call market structure. That is what makes up the market. We talked about the different kinds of market structure. Talk about the bullish uptrending market, the bearish or downtrending market, the range or consolidation, right? So if you have not watched the previous video, this is the continuation, and you may not really get much from this if you have not watched the previous one. So check on this YouTube channel or in the bootcamp group and you will see the previous video. All right, so let us head straight to the next topic, which is break of market structure. Now, this is a technical aspect of market of trading. No market trends forever, right? You should have this at the back of your mind, that there's no market that trends forever. That means a market cannot continue being in an uptrend forever. That means a market cannot continue just doing this trending from January, March, April, December, September, October, November. The market just continue doing this. No, it's going to eventually break and change and become bearish. That means what I'm trying to say is that when the market trends upward for a while, and the market trends maybe for some days or some weeks or some days, eventually it's going to do this, to change and start doing this, because there are buyers and sellers in every market. If you go to a market, like a local market, you don't have only people buying goods, you also have people selling goods, so you can't continue buying forever, right? The market is going to eventually do this one day, to change and now continue start trending downwards, right? Change and continue trend downwards. That's what we're trying to say. Trying to say the market cannot trend forever, and it cannot be in a particular structure forever, right? For a range case scenario, a market cannot range forever. That means you can't see the market do something like this, form a resistance, then form a support, and then doing this, the market starts doing this, ranging forever. You can't see the market do this forever. You can't continue ranging forever. Just keep ranging, 2 days, 3 days, 4 days. It's going to eventually do this. It's going to eventually break below this point and, continue selling, So it's going to eventually break the structure, right? So we can call break of market structure what we call SMS, shift of market structure. So we can call it SMS, right? Shift of market structure or shift in market structure. So this is SMS, call it SMS, shift in market structure. Shift in market structure, right? So you just put that in the label, shifts in market structure. That means the market has shifted from being bullish to being bearish, right? So we can call this SMS a shift in market structure, SMS, right? So let's just cover that. So still the same thing. When we say break of market structure, we're still referring to shift of market structure, shift of market structure, right? So let us go to the next thing and then we will progress, right? So now, how does market break structure? How do you know that a market has broken structure? How do you know? How do you know that a market is no longer bullish, a market is no longer bearish, and it has changed or shifted the structure? This is what we'll be treating today. Now, for the first case scenario, you know that in an uptrend, we have the market doing this. This is an uptrend now. Market does this in an uptrend, this kind of stuff. Now, when you see this, then the market is in an uptrend, and you know the drill. And this is your higher high, your higher low, your higher high, your higher low, your higher high, and then your higher low. Now, the rule of break of structure. This is the rule of break of structure. The rule of break of structure. Please write it down somewhere. This is the rule of break of structure. That for a market to break structure in an uptrend, price must come and close below the last higher low. Let me write it down. That is the rule of break of structure in an uptrend market. That is the rule, right? Right. BOS, or let's say SMS, in an uptrend happens when price closes below the last L. Right, this is the rule, yes, the rule. So let's make this bold. Font 16, right? So this is the rule. Please write it down, write it down, write it down. So a shift of market structure in an uptrend happens when price closes below what the last higher low. This is the rule for a break of structure. That means as we're looking at this market, we are seeing our higher high, higher low, higher high, higher low, higher high, higher low. So for this market to break structure, price has to come what below this last higher low. It has to come below. This is the last higher low you can find, right? So let's just label it so it will not be lost, you know. Let's label it. So remember our how we label it, you know, higher low. Right? So this is our higher low. I want to label the next one. I want to make this so you understand it. Right. So this is your higher low. Remember this today. Remember the rules of this. That the higher low must be higher than the last higher low. Watch the last video to understand that. So you know. So you can also clone this and put it at this side too. You know? That changes, no. Market makes higher highs and higher lows in an uptrend. So this is an uptrend now. So you know higher, 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 all of that. So let's just clone this as well. And then this is it. So this is the last higher that you can find. This is the last one. So for a market for you to have an SMS, a shift in market structure or a break of structure, right? You can call it a BOS or an SMS. Still the same thing, right? So for a market to shift to break structure, the market has to come out and come below this higher low. You know, for an uptrend, the market must never go below the higher low. You must do this. So I'm higher than this one. So I told you that the higher low must be higher than the previous one. When this market now goes below this one, it now becomes what a bearish market, right? So see higher low, higher high, right? So now look at the market break structure. So you can see this. The market comes and comes below here. So when you see this, we call this what a break of structure or an SMS or a shift of market. So you can simply highlight here with an arrow. I use an arrow to signify break of structure. This arrow. So this is now. This arrow means that's at least a shift SMS. So this is the arrow I used to signify that it has shifted structure. So now you have seen that this market is no longer an uptrend again, because why? The market has given us that shift in market structure. So this is no more an uptrend, it's not a downtrend. So after this, what do you expect? You now expect the market to start becoming a downtrend market. That means the market to start doing this. Instead of continuing higher highs and higher lows, the market will start doing this. You know? So the market starts doing. Immediately you see that SMS, right? So this is how the market changes structure from an uptrend to a downtrend. That means as the market is turning up, you want to see the market come below this last higher low, and you cannot call this our SMS, right? Let us text it, put the text there, our SMS, right? Our SMS, shift in market structure. So count is our SMS. So market comes in. This you can call this event an SMS, and then after you see this, the market will now come to form a lower high, take the sell. Lower high, take another sell, you know, now a seller's market. All right, so that is it. So what that is for a bearish scenario. And let us look, what if this is a BOS for, and so now let's assume that we had a downtrend. We want to see how this one will change to uptrend. So this is a downtrend, and the market is forming what we call lower highs and lower lows, as indicated in the last video. So this is an SMA, this is a downtrending market. All right, so this is it. See the market doing this. Right now, how do you identify the shift of market structure? And then you know the usual thing that you label this. Now you label this lower high. No, I did not label in the previous video. So this is your lower high. This is your last lower high, and then you can clone this as well. Bring it here. This is a lower high as well. You can also clone this as well. Bring it here. So now this is our lower low. After a lower high, market makes a lower low. No? You can watch the previous video to see more about that, right? So you can just tap this and make it our lower low. Lower low. So this is it. Okay, you can clone this as well too, and lower low. So the market is this. Now this is our rule now for downtrend. There's an SMS in a downtrend. Let us bring this here. These are the rules. Please write it down. Write it down. Write it down. Right. So this is downtrend. This is a downtrend. So it's SMS in the data happens when price closes. So it's different. So it's below. So it closes above the last what? Lower high. Last lower high. So now, as you can see, this is a downtrend. This is the last lower high. So for this market to change to an uptrend, the market has to come and close above here. And what do I mean by close? Close simply means the candle, like these are the candles. This candle has to close above, or this candle, look at this, this is the close, this is the close. All right, watch the previous video, I talked about candle pattern, all of that. So this is a close and this is a close. So the market has to come and close above. This is where this one close, this is where this one close. Look at the close is where the body of the candle stop, not the wick. You use the body, not the wick. So this is the body. So this body has to close below this one, or close above. So that's what I simply mean by close. When I say close, I'm definitely referring to the body of the candles, right? So now this is the downtrend. This is our lower high, and then look at what happened. What the market did. The market came right and closed above this last low. Right? So can I call this? Can I bring out our arrows? All right, this is an SMS, right? You bring our arrow and indicate this as our SMS. So this is now a shift of market structure for SMS, right? What is our SMS? So we can simply say SMS, shift in market structure. So market is no longer bullish, bearish again. So we can call our SMS with our arrow, right? So now what we will expect now, remember, when the market shifts, it becomes an uptrend. So the market will do this, tap like this, pop, and then it starts buying. It's no longer a bearish market now. It becomes a bullish market or an uptrend market, right? So markets are doing this. So instead of the pattern, have you seen the pattern has changed? Have you seen the pattern has changed? The pattern has automatically changed, right? So we use one chart to illustrate this, right? So let us see that. Look at this. Look at this. Markets are doing this. So this is what a break or structure simply is. This is what we call a shift of what? Market structure. A shift of what? Market structure. So we have gotten this. All right. So let us delete all this so we can check the last one. What is a break or structure in a range? So for a range case scenario, we see the market do this. Remember how range happened? This is a shift in market structure of a range. So see this happen. The market form an up a support and resistance. And then the next thing you see is that the market does this, does something like this. The market is in a range, it's ranging inside a box. It's a range or a consolidation market, or what we call a sideways market. So for a market to give the SMS, right, it has to close above or below the range. That means the market must do this to come like this, do something like this, and now come below this range. So we call this our SMS, a shift of what? Market structure. So now this range has been broken. Since it broke the downside, we are looking to sell or go short on this market. Right, so this is an SMS. The market has gone below the range. So what do we expect after this? The market will come and do this, to come and test that range again, and then it falls and starts selling down. So this becomes a downtrend. That's when it happens, it closes below. But for a scenario where it closes above the range, we expect the market to do this. If it closes above the range, then the market was, let me remove this. This is for a down scenario. So if the market was able to do this, come and close above the range, the same thing, come and do this and then continue buying upwards. So this is a scenario for a break or so for a range. Right? A scenario of a range. All right. So we can go to the next thing, which is identifying these things on real charts, right? Let's identify this in on real charts. Let us look for where we can find an SMS, a shift of market structure. All right, so let's go to our real chart now. Let us see if we can find this. This is a 2-hour time frame. All right, so let's look for this is Bitcoin, right? This is Bitcoin. I'm looking for a good scenario, right? A good break or structure scenario where we can just use and then, we move on. Bitcoin chart is not always so clear because of how it moves. It's almost it does not move smoothly. It's always dancing up and down and all of that. But look at what I'm saying here. This market was kind of trending downwards. You can see it's not always so perfect on real charts. Look at lower high, lower low, lower high, lower low, and then this was our last lower high. As I'm seeing here, this is not a lower low because this low is not below this low. So this is our last lower high for a downtrend scenario. So you can put our arrow there to check what happened. So markets, look at this. Look at this. The markets came clearly what's above here. Look at it. Markets close above this situation. So we can just extend to see if it actually went above. So look at this. It came clearly above here. So this is a break of market structure. And look at what happened. Remember what we do. As the market gave that BOS, what happened? It came back down to 4 million. And look at what? So buy, he bought a bit, but it still changed name. So this is not usually so perfect on charts. They're not always so perfect. All right. So let me see if I can find in something similar. Let me check on Ethereum charts. I just want to use the cryptocurrency. Let's see go and see something like that on Ethereum. Ethereum. Yeah. Ethereum. Ethereum USD. Okay. Yes. Ethereum. So you see Ethereum USD. Right. So this is a 2-hour time frame now. We're trying to see if we can see something that looks good or be like a BOS or something like that. All right. So this is a 2-hour time frame. I did some markups here. Let me zoom out and see if I can find something. All right. Let me zoom out. Okay, let's go to 4-hour. Right, so this is it. Let's go to auto. All right, wow. This is beautiful. This is beautiful. This is beautiful. So look at this. Look at this. So you can see that the market was trending upwards. Look at what I've been teaching since. All right. All right, so you can see what the market has been doing. Let's remove this and start all over again. All right, so this is it. Look at this. Look at this. Can you see what we're saying? Higher lows. This is an uptrending market. This is the last higher low, and then it's a higher high. So this is almost usually perfect. Look at what happened there. This is our last higher low. Look at how the market came and closed below this last higher low. Look at what happened after that. It's Richards now. We're not making up these stories. Look at it. It's closed below, came below. Look at what happened. It came and formed a lower high. Can you see this? Formed a lower low. Look at this. Are you seeing how it happened perfect? Are you seeing how it has shifted structure? Can you see it? Can you see how this things happen? Since every side has been going down, has been going down. So that is it. Very simple break of structure. All right. So I think we'll be wrapping up for now. I don't want this video to be too long. Let us break of structure for you. All right. In the next video, I think I'm talking about time frames and multiple time frames analysis, right? And that will be how we'll be wrapping up for technical analysis. Right. We'll just end with multiple time frame analysis. All right, and then we'll talk about risk management and trading psychology. That will be the last video on this bootcamp, right? We cannot exhaust everything on this bootcamp. We can't really exhaust everything. All right, we'll just talk about the next video. We'll talk about I think the next video talk about multiple time frame analysis, and then we might touch a bit on retracement. Yes, we'll talk about retracement and multiple time frame analysis in the next video. That is retracement and multiple time frame analysis. And then we'll talk about I think trading psychology, right? And then we'll talk about one last thing, which is maybe I'll just introduce you to institutional candles, or what we call smart money concept. That will be a bonus. It's not really, shouldn't really be part of this bootcamp, but since I trade that, it's wise I just mention one or two things I trade. So now the assignment for this video, right? Just one assignment, and then we call it a day. The assignment for this video is simple. This is the assignment for this video. After this video, it's just 2 assignments. I'm going to share a book for you to read on candlestick patterns, for you to know the candlestick patterns that we have. I will share the book in the group. Right. So the first assignment is these are the assignments now. Assignments. It is for me the assignment by 2 o'clock, 2 p.m. So assignment is this: identify a shift in market structure for uptrend, downtrend. So this is the assignment now, and range. So let's identify a shift in market structure. And then the last one is read. Okay, I'll start reading the book. I'll say a book. So read candlestick. I'll send a book to you. Trading Bible. Right, to start reading it. That is one of the assignments. You have to read it, start reading it. Read half of it. Right, just read half of it. Just read half of it. Don't, or just look at the book and read half of it. Just read half right? If it's 130 pages, read 65. If it's 20 pages, read 10. Just read half of it, the two assignments. But send the screenshot of this SMS for uptrend, downtrend, and range to the group, right? So we can know that you have understood this thing, right? So that will be all for now. If you have not subscribed to the channel, please subscribe to the channel. Like this video, share with your friends. This bootcamp has to go wide. People have to know about it, right? So share it with all your friends, and we'll see you in the next video, right? Have a wonderful day.